Financial inclusion is defined as a process by which all individuals and businesses, including MSMEs, can access appropriate, affordable, and timely financial products and services, such as payments, loan, equity, and insurance products. Its importance derives from the promise it holds as a tool for economic development, particularly in the areas of poverty reduction, employment generation, wealth creation, and improving welfare and general standard of living. At the 16th Annual Banking and Finance Conference of the Chartered Institute of Bankers of Nigeria, CIBN, last week, panelists discussed monetary policies and financial inclusion, bridging the gap, during the first business session. We have excerpts of their discussion in today's package, plus the top stories from the CBN and more, all after this message. Stay with us.
Oh, I see. Just hold on in that case. Let me call out my PIN. It is 41...
Uncle, please stop.
Stop what?
You're giving someone else your personal identification number PIN?
Not someone else. It's from my bank.
Please hang up, Uncle. That's a fraudster.
That's not true. But they call out my full name. I am sure this is from my bank.
Uncle, no bank is ever going to call you to ask for your personal identification number PIN, your mobile banking password, or your card verification code, CVC.
But it sounded so genuine.
Yes, hackers and fraudsters always sound genuine. But please, Uncle, don't fall for their bait. Don't respond to any phony emails, text message, SMS, and don't click on any link you're not sure of. Even if they call your date of birth or your BVN, don't give them your security details. If you suspect any issue with your account, please go to your bank.
Oh, I see.
This message is from the Central Bank of Nigeria.
Welcome back. The Central Bank of Nigeria says it has no plan to introduce any new Naira policy meant to crash the dollar exchange rate to 1 Naira 25 kobo to a dollar, as being circulated online and on social media platforms during the week. The Apex Bank has therefore advised the general public to disregard the message as it is untrue. The fake report stated that a new strategic agenda for the Naira would be introduced by November that will make $1 exchange for 1 Naira 25 kobo, suggesting currency redenomination. The misleading report went further to state that the policy will better anchor inflation expectations and make for easier conversion to other major currencies, eliminating higher denomination Naira notes with lower purchasing power. Meanwhile, the Central Bank of Nigeria has instructed deposit money banks in the country not to use proceeds from the revaluation of the Naira for payment of dividends or to finance their operations. Director, CBN Banking and Supervision Department, Mr. Haruna Mustafa, in a letter to all banks on Monday, 11th of September, said a review of the foreign exchange regime's change showed that the banks are in a position to profit from the policy because of its potential to significantly increase the Naira value of banks' foreign currency assets and liabilities. Additional implications of the forex policy reforms may include breaches of single, obligor, and net open position limits, possible increase in asset quality risks, and pressure on industry capital adequacy. Banks are therefore required to exercise utmost prudence and set aside the foreign currency revaluation gains as a counter-cyclical buffer to cushion any future adverse movements in the foreign exchange FX rate. In this regard, banks shall not utilize such FX revaluation gains to pay dividends or meet operating expenses. Similarly, the Central Bank of Nigeria has cautioned international money transfer operators (IMTOs) violating its extant regulations to desist or face appropriate sanctions. CBN Trade and Exchange Department, in a circular to all international money transfer operators (IMTOs) on Wednesday, 13th September, said routine checks revealed that some IMTOs were operating and acting in breach of its guidelines, as contained in an earlier circular dated 9th August 2023. The August circular had enumerated terms and conditions, including payment mode, pricing, and rate quote that must be complied with while providing international money transfer services. CBN said it observed arbitrary rate quotes outside of permissible range and other sharp practices by some IMTOs in breach of its guidelines, and going forward, any IMTO found guilty could be compelled to sell their proceeds to the Apex Bank, suspended from operating or lose its operating license. International money transfer operators are required to quote rate within allowable limit of minus 2.5% to plus 2.5% around the previous day's closing rate of the Nigerian foreign exchange market for their transactions. The Central Bank of Nigeria has announced the 2023 edition of its International Financial Inclusion Conference holding in Lagos at the Landmark Event Center from the 5th to 6th of October. The second edition of the conference, themed Financial Inclusion for All, Global Insights for Local Impact, was announced via all CBN social media handles and hopes to take the successes of last year's edition to the next level, with more stimulating conversations capitalizing on the insights garnered from the recommendations shared to foster sustainable economic growth. This year's International Financial Inclusion Conference also offers sponsorship opportunities by category, making the platform available for brand visibility. For further guidance, make use of the contact details now showing on your screen and scan the QR code to register. Thank you for staying tuned. This is from the CBN, a weekly program that brings to you reports and expert analysis of the actions, policies, events, and economic initiatives of the Central Bank of Nigeria, CBN. An economist, Mr. Abiodun Adedipe, during a business session of the 16th CIBN Annual Banking and Finance Conference last week, noted that the nano, micro, small, and medium enterprises represent over 50% of Nigeria's GDP, accounts for over 80% of jobs, and constitute over 90% of registered businesses in the country, which underscores their importance to the economy. Lead speaker for the business session, Managing Director and Chief Economist, Africa and the Middle East, Standard Chartered Bank, Mrs. Razia Khan, who made a virtual presentation, spoke on monetary policy and financial inclusion, fiscal reforms for accelerated growth, applauding Nigeria's monetary policy shift in the asymmetric corridor around the MPR, adding that some form of monetary tightening is inevitable for the country, with implication for the financial inclusion agenda.
This tighter environment has been long in the making. Don't assume that it's going to go away quickly. Don't assume that there isn't going to be pressure on individual economies to tighten their own conditions meaningfully. And the reason why I keep emphasizing this is we know that some form of meaningful monetary tightening is inevitable for Nigeria. So the question that my fellow panelists are going to have to address is, what does this mean for the financial inclusion agenda? Is there a way of making financial inclusion real, with real gains, with actual inclusion, actually expanding the reach of financial services, actually intermediating more effectively, taking short-term deposit mobilization and transforming that into something much more meaningful with effective financial intermediation that will make longer term credit available to the economy? Is any of this going to be possible given the tighter conditions that Nigeria too will need to adopt? There has meaningfully been a shift in the asymmetric corridor around the monetary policy rate. This is a good move, a good reform in the direction of making policy more effective. But if we look at most market rates in Nigeria, they're still well below the rate of inflation. There is understandably some recognition of the fact that when you've just gone through something like the fuel subsidy reform, this pushes transport inflation up, that impacts the cost of almost everything in the economy. There is still a parallel market premium. The pace of depreciation of the naira on the parallel market is doing its bit to pressure prices. That all of this will mean that inflation will likely be more elevated in the very near term than you would see as the norm for Nigeria. Nonetheless, given what happened with the exchange rate before, questions persist. Nigeria needs to see a tightening of policy, but to what level? Should we be seeing positive real policy rates? Positive rates with respect to current inflation? Should we be seeing positive rates, a more gradualist move with respect to where inflation averages over a multi-year period? Investors, given the recent past in Nigeria, will certainly be demanding higher risk premia in return for investing in Nigeria and taking on those risks. We know that if Nigeria is to successfully resolve its foreign exchange difficulties, this needs little introduction to the audience in this room, that there is going to be a need for tighter policy overall, and there is no getting away from that.
Members of panel interrogated what needs to change in monetary policy and action so far taken to deepen financial inclusion in Nigeria and also to expand the scope of economic activities at the bottom of the pyramid. There was a robust Q&A session after the panel discussion.
So let me go first to Mrs. Queer here because you are with me here on the floor. Let's get your views in 5 minutes about this topic. Thank you.
Okay, thank you. Financial inclusion is what I do, and SANEF, a company called SANEF, was set up in 2019. It was the banks who actually came together to set up something called Shared Agent Network Expansion Facilities. So part of what we've done, just talk about what we've done so far since 2019, starting from this agent expansion. In 2020, we were supposed to onboard 500,000 agents, which was done from like 83,000 in 2018. Today, we have about 1.7 million agents all across Nigeria, all across the 6 geopolitical zones. I'll also say that we're present in all the 774 local governments. We felt that it wasn't just, we shouldn't just be doing cash in, cash out at the agent locations. So part of what we've also done is to introduce other products at the agent locations with the help of the banks and the mobile money operators and super agents. So we have a connection between the super agents, the MMOs, and the banks, such that at any agent location, they're able to open accounts for anyone who wishes to open an account or a wallet at the agent location.
Right now, let's go to the virtual platform. Can we take you first? First of all, Layinka David West. We'll come back to President Ike Amife.
All right. Thank you very much, and good afternoon, Chair and delegates. We're talking about financial inclusion and why it's important as a macroeconomic tool and as a developmental tool in general. When you go to the EFINA 2020 results and you ask people, why don't you have a bank account? Which is, again, the entry level to financial inclusion. It's important that we take notice of the reasons. The top 3 reasons are attitudes and perceptions around preference for cash, for example. Trust is another one. The second reason is distance, and that's the problem Sanef and Ronke and her team are trying to solve. How do we bring financial access closer to the edge of the market and at the bottom of the pyramid? And then the third is this issue around livelihoods. There is no economic inclusion, they don't have jobs, neither do they have any form of stable income. So the bottom line is that I don't need a bank account if I don't have money. And those are the things we need to address as we think about financial inclusion. Because while the central bank and the bankers have taken it on as their initiative and driving it, it's actually a social development tool that needs the attention of every single sector of the economy. So how do we think around it? For example, social development, we look at women's financial inclusion. In Africa, Nigeria has the highest gender gap, which is 8%. But then again, so women have less access to financial services than men. How do we close those gaps? How do we ensure that we can build in women's economic empowerment systems to aid them to drive their economic activity that helps them need a bank account and then formalize the way they think about doing business, etc. So I think in Nigeria, we've done quite well, but what we still need to do is solidify the foundation so we can drive scale. And scale is what we need, because having 106 million plus Nigerians in the financial system, but yet only half have access to formal financial services, really serves the mantra and the mandate that it's more expensive to be poor. So collectively, public, private, 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 public, public, we all need to come together to say, you know what, how do we change the narrative around financial inclusion, around access in a manner that drives impact and drives social change? Thank you very much.
Thank you so very much, Professor David West. So let me come back to the hall here and then invite Mrs. Akimami to also make her own contribution.
Yes, so I'm going to look at it more from a macroeconomic point of view. I'm an economist by profession. And one of the questions that our speaker raised, Reza Khan, she asked, is inclusion possible in a tighter policy environment, considering the fact that the CBN's primary objective is price stability. And we know that what is driving this increase in interest rates is basically to rein in inflationary pressures. And that addresses some of the issues we are facing with respect to financial inclusion in Nigeria. So when you're talking about access to credit, affordability, low income, and what have you, because the higher inflation rises, your assets, the value of your assets reduces. So basically purchasing power is eroded, asset portfolios are eroded. So what can you do in a situation like this? So basically it's just looking for more cost-efficient measures, more cost-efficient financial services, basically. Because the people that we're trying to bring into this financial fold, if they don't have the income, they're not going to open bank accounts. You can only do that based on what you have. So, and one of the major issues also is the high cost of financial services. So we need to find a way to make sure that these financial products are affordable. So come up with innovative ways, because you also have your profit margins to think about. So that talks also about collaboration with all stakeholders. So the CBN, the banks, the fintechs, it's not competition. It has to be that collaborative effort with all stakeholders present. We've talked about investing in digital infrastructure and what have you. I'm also going to talk about the importance of investment. There's this national income identity equation that we economists like to talk about, wherein aggregate output is a function of consumer spending, government expenditure, investment, and then your external sector. Out of all these indicators, it's only investment that has a multiplier impact. So that just shows the importance of investment. You cannot underestimate it. So whatever we need to do as policy authorities, as industry stakeholders, as the government, as the private sector, we need to ensure that we attract investment by creating that enabling environment, by ensuring that there's policy, clarity, and certainty, by boosting investor sentiment to attract investment flows. Because without investment, there's so far we can go and achieve. So I just want to close with with that investment is very, very important for us to achieve the goals of financial inclusion and even all the other goals that we have to achieve economic growth and transformation, which is the theme of this particular year's CIBN conference. Thank you.
Thank you so very much. That was very pointed. So we now go back to the virtual platform and take the comments from Professor Kenneth Ife.
Thank you very much for having me. And I begin by putting my take. My take is this, which you could call the hypothesis, is that as long as we have import-dependent economy, which places our economy on the transmission belt of global economic shocks and headwinds, and as long as we continue to experience high levels of financial exclusion, then monetary policies, parameters, and macroeconomic indices will continue to struggle. They will continue to struggle. Now, if you look at the central bank, which has the core mandate in the area we are discussing, it has mandate on pricing stability and financial system stability, but also has a secondary mandate to promote sustainable economic development and inclusive economic growth. Right. I know many people are not happy about the extent to which they have intervened, but the intervention is necessary if we can have some understanding on how far it can go. First, look at the key challenges. First, the high level of unbanked, which we know varies from what we are, is at variance with what NBS says and what World Bank says. World Bank has a higher view. Then you have the lack of financial literacy. The reasons, a part of the reasons, lack of financial literacy, education and awareness need to be, high cost of opening bank accounts, and then the large informal economy and also consumer credit that is low. All of them come together to tell you what the bounding constraints could be. Then we also have the non-inclusion that can affect savings and liquidity of banks. If we want the banks to give out more money, then bring in the deposits. And then also, the constraints that they're facing with some of the CRR and the liquidity ratios and all of that constrain the amount that the banks also can lend. So we're aware of all of that. But the fact of the matter is that when you don't have enough inclusion, it also affects the transmissibility of monetary policy. So when the bank comes to open market operation, who is it targeting? It's targeting the banks. The banks have very little money at their disposal, and all of these issues will begin to crystallize. But the CBN's financial inclusion strategy was actually set out clearly to significantly increase access and then also find a way of working around the high cost of financial services. So we have to compare like to like. CBN has invested in digital payment infrastructure. We know that, including, of course, the USSD. It has also licensed a lot of giving impetus to fintech engagement in agency banking, giving licensed telcos to help out, and even the FIRS is finding them useful in helping them collect their taxes. So e-Naira is a solution, but it has its potential to be realized. But the fact is that they have invested. It is the investment in payment infrastructure and the systems that is helping drive this. So you can't exclude the central bank's intervention. They are helping to create a level playing field and invest in the national infrastructure. They will enable the players to play.
That's all from the CBN this week. Be careful not to fall for any fraudulent recruitment portal or loan scheme advertisements purportedly from the Central Bank of Nigeria. Get your information from trusted sources always. Report unresolved banking issues to the CBN Consumer Protection Department using the email cpd@cbn.gov.ng. Attach relevant documents. Call the CBN Contact Center on the phone line +234 700 2255 226. Local call rates may apply. Write to us through the email address fromthecbn@gmail.com. Follow us on Facebook, YouTube, Instagram, and Twitter for updates and to watch uploaded episodes of the program. We invite you to join us again next time. I am William Misi Dada. Stay safe and bye for now.